How did the COVID outbreak impact the Insurtech community? Did our sales drop? Or is it not all doom and gloom? Did COVID actually accelerate the digital transformation programs? And does this result in a bright outlook? What is the outlook with regard to funding and valuations? Can we expect more insolvencies? Who will be the winners among the Insurtechs? Who may need to consider to pivot their value proposition and business model? In a joint survey of DIA and McKinsey, we gauged the Pulse of Insurtech. We spoke to 100 Insurtechs and investors from around the globe. Curious about the results? Here's your 20-minute update.
Everyone will agree that 2020 is shaping up to become a memorable year. We see several sectors being affected in many different ways, and of course, insurance is no exception at all. The business impact is significant, both in positive as well as challenging ways. And for many insurers, this has been a wake-up call to speed up and accelerate their digital transformation, yet it's still a long way to go. So we asked ourselves, how is the Insurtech sector affected by these trends? What are the longer and also shorter term effects that we might expect given the recent developments? And what is the view of the Insurtechs and the investors themselves on this space?
We did the research in the summer of 2020 and no less than 100 members of our community participated. From Insurtechs dedicated to health to tech innovators in home and automotive. From AI solution providers that focus on claims and fraud to companies that help incumbents to solve legacy issues with entirely new platforms. From startups to scale-ups and from VCs to corporate venture arms of large carriers and from across the globe.
After DIA Prime Time, our report, The Pulse of Insurtech, will be available for all of you. So now, rather than just presenting the key insights from the report, which you can read anyways after it's published, we've asked 6 industry thought leaders from Asia, Europe, and America to comment on the key insights in today's talk show at DIA Prime Time. From Asia, we have Jonathan Larsen, as well as Adrian Lebec. From Europe, we have Tom van der Brühl, Ramin Niromand, and Stéphane Gunet. And finally, from the US, Max Chi.
The first key insights relate to growth expectations. And this is definitely where everyone has a very positive, optimistic view. Everyone agrees that the industry needs no more conviction that digital is the way forward. And Insurtechs already see an uptake in their business.
COVID impact is actually broader than just Insurtech. The impact of COVID is going to be about, I would say more broadly speaking, digitalization of the economy. And I would very importantly put payments, fintech, banking, and obviously insurance together with it.
This crisis, this unfortunate crisis, is a kind of trigger point in accelerating some of the underlying trends that we've been seeing over the last years, and I really see this accelerating these days.
Yes, I think anything. I think the big themes we're seeing is everything is digital, right? To streamline workflows. Virtual is very big, right? So whether it's first notice of loss or evaluating properties, anything that you would have done with a physical presence, if you can do it virtually, I think has gotten a huge uplift and huge importance. A lot of this sort of transition to the cloud and to digital would have happened anyways, but I think it's happening quicker as a result of what's happening.
What we're seeing now is really the concrete interaction with the clients, with the customer, and to make sure that you can deliver your services. Yes, that is absolutely taking off.
But the dominant opportunity is for the incumbent industry to retool and to take the advantages of a digital model and of I think the fundamental change in perspective that some of the good insurtechs have brought about in terms of their sort of customer advocacy stance. I think melding those things with the advantages of incumbency to us is the dominant opportunity. So that's where we see just huge opportunity, and that's good news for incumbent players, but it's not good news for incumbent players who aren't rapidly changing.
However, I still believe the change of the industry takes longer than many people also in the insurtech scene expect. Also in times like Corona especially, where people are a little bit isolated, a little bit distant, where the social life is reduced to a minimum, people like to interact and to interfere with human beings. And if it's only a consultation about financial service products like insurance. So we should never forget that this human touch, maybe in times like today, is maybe even more important. However, I still believe the insurtech growth is clear happening.
Let's move to the insights regarding organization and culture. COVID definitely made insurance executives aware that they need to accelerate the digital transformation efforts, but there are still some hurdles to take.
We are still scratching the surface when it comes to digital transformation. Some of the more traditional players within the insurance industry have been badly affected in their core business, right? And I mean, traditional channels, agency, bank branches, and so on. And I think that will create, I believe, a stronger appetite to disrupt themselves a little bit more, to be a bit more ambitious when it comes to digital transformation, especially when it comes to distribution.
On the insurance player side, I think that they are now more than ever convinced that time has come to fully digitize the business. On the other side, obviously, they are all in crisis. The decision-making processes, the internal budgeting process, and so on, is not facilitating. These very complex, large, so-called legacy processes and system and technology are still there. But it's massive. It's huge investment.
I think what we've tried to do within our company is create an attitude for change and an openness to change. And we view change as an opportunity, not as a threat. And we've tried to embed that across the whole place. Obviously, there are going to be some individuals and some areas of the business that are more receptive than others, but in general, that's the culture that we've tried to create at Ping An. So I think that's fundamental.
In order to be successful there, you need access to a couple of treasures. And one is definitely data. The second factor is you need people to take care of this data. So data analysts, data scientists, people who dominate the capabilities of working with these data, but who are intelligent and creative and experienced enough to use it in a really, really interesting way. These are they're not growing on trees. Yeah. And I think the third thing, and that's probably the most challenging topic, I would think, is you need to have a vision.
Yes, I'm surprised that there's not more push towards transformation from within. That's why I also see high benefit in insurtech coming from within. So insurtech regarding the back office processes, middle office processes, core processes, there is a bigger change needed. That will take long, but this change will come.
Besides the business development, the funding market is of course highly relevant also for the insurtech sector. We see a lot of funding available, and this will likely also continue, yet there are potential pressures on valuations.
But clearly, a lot of insurtechs have been running after a valuation game, right? Because when you create a company, this is one of the objectives you want to achieve, creating value also for you as a founder. And I believe there's a very strong disconnect. Valuation will actually be more reasonable and will create, in my view, a more sustainable market, because the one that's not able to scale will have more difficulty to access funding and might not actually be carrying on forever, as what would have been the case still 1-2 years ago.
I see more and more interest of investors. Even new investors coming to this space. Insurance is probably and remains probably one of the biggest industry, but is far behind what other industries have done over the last 5-10 years. There is an immense opportunity of creating innovation and then creating value out of it. The valuation will further increase, but I believe symmetrically that it will be much more demanding and difficult for a whole bunch of started for them finding capital maybe harder.
With the successful IPOs of Root and Lemonade, the valuations of Duck Creek, there's been a lot of momentum in InsurTech. I think there's a huge bifurcation. Companies that are growing 100% or above have valuations that are double, triple companies with growth rates of 50% or less. It's really just a function of how quickly you're growing. And that will get you kind of the multiple and the valuation, at least from an investor standpoint. And venture capital is a very long-term asset class. So there'll be still a lot of venture capital money in the market. So I don't see a slowdown in funding, especially because there's a lot of later stage capital available in the market.
Fintech, I think in InsurTech, the patience needed doesn't really fit to the timeframes early stage VC funds very often have. When they have a fund duration from 5 to 7 or with an extension to 3, then that might not fit if companies really excel after 8, 9, 10, 11 years. And I think InsurTech clearly needs the duration.
You may see perhaps a slowdown in corporate venture capital. Yeah, depending, because they may have different they have different levers they can pull, and they may decide to moderate their capital budgets. But that's more of a function of the individual sort of corporate and what their strategy is around venture capital.
For those companies in a certain zone where investors have a belief that the paradigm is going to shift to digital, even if those companies aren't yet showing their revenue potential, if they show the path to scale or have early scale, it's actually not that difficult to raise capital, and it seems to be the case that it's possible to command very healthy or very significant valuations.
We closed 3 funding rounds within the Corona high times. So when you are an existing business, Series B, Series C, good traction, then also funding was possible at the time. However, clearly for new investors into new firms, that was difficult. So very early stage companies was difficult to fund. And some of the rounds were prolonged.
Companies that provide you with super focused functionalities that help your value chain become more effective and more successful. There I would expect a little less money going in for probably 6-8 months, and then hopefully they're going to I would expect it to take up again, and that for me is more the future. And then there's the platform business and the insurance in a box software as a service business that has gained a lot of maturity in the last 2-3 years. There's a lot of companies around, and here I would think there's going to be a consolidation phase as well to come. They can't all survive.
So where does it take us? What does the new normal look like? We expect a make it or break it moment for several startups soon. And reaching scale and sharpening the value proposition will be key to succeed.
It's going to be mid-22, 23 before we see any kind of real normalization. Now, if that gets delayed, a resumption of normal life and normal economic activity obviously will be delayed as well. I think it will also just take time to rebuild some sectors. I think, probably the new normal for sure will accelerate the digitization trends that have been present, through the development of the digital economy over the last 20 years. Insurance is a very good example that have hitherto really not fundamentally changed and not fundamentally digitized. It hasn't been transformed by it. For the most part, it's just interfaced itself with the digital economy.
And actually, the startup scene is booming. The funding is coming back. So there's no real change to being observed from before the crisis. Maybe a little change has been observed, if I may add. People tend to bigger organizations, so bigger startups, bigger tech companies, more corporate venture. That is an opportunity for a lot of corporates as well. I think the people tend not so much to the next small crazy bet as they, and times like now, is seeking a little bit more security.
Investors are looking and will be even more looking, is the capital efficiency, the ability of entrepreneurs and their business model to really be, as capital efficient as possible will be, I think, even more important than it was in the past.
And there is probably going to be a refocus, and not every insurtech is going to survive.
I think now it's about two things. One of the first of it will be, okay, prolong your runway, and everyone can see that things that you don't do digitally probably is not done very well. And the second thing would be that you communicate on your vision in the right way, because now there is a big opportunity actually to surf on that wave that made it more visible to everyone.
From an exit standpoint, I think companies still need to get their arms around reconciling fast growth with high losses, and they may value more moderate growth and more moderate losses, or even there's this concept called EBITDA. I don't know, not many people of your insurtechs focus on that, but certainly the buyers do, and we hope the buyers will focus more on growth and revenue multiples in the insurtech world, and I think that could lead to an explosion in M&A opportunities.
We see plenty of companies that look like they have a good idea and a good model, and they get to, let's say, $10 million or euros of revenue, and they kind of plateau at that point and really struggle to get to the next level. And they've kind of dropped the ball from that point onwards. So I think if you're thinking about your business starting at an early point, you've got to be thinking of what is your real addressable market, and if you really want to be a very valuable, if you want to be a 500 million, 1 billion, 2 billion, $5 billion company, you better be addressing a very big market and a very big problem in that market. So I think thinking big and constantly iterating your model in the anticipation that you will scale to many, many times your current size, I don't think that's something that comes naturally to most people.
A part of the discussion is not being carried out. We're not talking about how healthcare needs to be organized at the moment. That people don't go to dentists anymore because of COVID. So there must be, and insurers and the payers in this system have a role to play. I mean, this is not just about how can we claims declarations in the most efficient way. How can we actually solve the problems that we're seeing in society right now? And then at the end of the day, who's making money with it? There's enough for everyone. I'm not so scared for that.
The thing I love about technology, Roger, and investing in technology is this. It's you think about secular changes, right? I mean, the strength of the iPhone and the strength of technology, it doesn't matter necessarily where you are in the cycle of the economy, right? So the cycle can be up or down, but if you have a strong enough technology trend where you're saving your customers money, you're having a great user experience, you leverage technology for all the things it can do to improve a business and improve a consumer. That's not going to change in an up cycle or a down cycle. I think that's fundamentally what we're going to see here over the next few years, and InsurTech has done pretty well, even in a very uncertain and volatile time, which is the times we're living in right now.
Thanks to Jonathan, Max, Adrian, Stefan, Ramin, and Tom.
We'll publish the report shortly. Check our website to download: www.digitalinsuranceagenda.com.